All right, what's up, Tycoon? Super excited for today's video. We're going to be breaking down BNGO. Okay, this is Bionano Genomics. And this one has been really obliterated in the stock market, and I'm going to be covering it because now is a really great time in this bear market to start investing smartly and choosing companies that you really believe have great long-term potential. Okay, you need to do some fundamental analysis on them. We do have some technical analysis I'm going to break down for short-term, senses, right? If you're looking to day trade this, swing trade this, make sure you watch till the end of this video because that's when I'm going to break down the key levels. Before we do that, okay, I'm going to go ahead and do a little bit of intro to some fundamental analysis on it. Nothing too deep. Okay, we're on chartmill.com. We're looking at BNGO. All right, and it's got a 4 out of 10 rating here. Okay, so not the best. All right, definitely not the best. Okay, one of the main things that's hurting it is profitability. All right, it's got a 1 profitability rating. And the reason that we're seeing that this stock is just down so much, it's been beaten so much, is because of the profitability rating. All right, this is not a stock market that is going to respect at all any profitless companies. Right, if you're not generating profit and increasing revenues and things like that, this stock market is not for you. Okay, it's gonna chew you up and spit you out, and that's what it's been doing with BNGO. It's brought it down, to like $1. All right, it's I believe it's at $1.50 right now, but that's an explanation for it. Okay, and you can kind of look for that to continue in the shorter term. All right, until we really see some economic conditions change. Okay, because that's the main thing, right? The economy is not in a good environment where institutions and hedge funds are going to be dumping money into all of these profitless companies, right? That's not where they're going right now. That's not where they're putting their money. They're rotating their money out of those plays and into other ones. Okay, so you know that's a little bit of an explanation for you guys on why it's been taking a beating so much compared to other stocks. All right, it's got a valuation rating of 2 here. All right, growth is really its category where it's got a lot of potential. Okay, and that's why I'm saying that in this bear market it's really good for you to invest in companies. So are you willing to invest in a profitless company, right? That's got no profits, but it's got high growth potential. All right, that's like a reason you would be investing in BNGO. All right, currently I do not own any shares of BNGO, so I'm not shilling it out to you guys, not trying to force you guys to buy it, but I'm just trying to give you guys a little bit of tips and education on how to start choosing and picking your stocks. Right, you don't want to just go into them blindly. You need to do a little bit of fundamental analysis. Look for some intrinsic value, see if they're overvalued, undervalued, things like that. All right. And health, it's got an 8 rating in the health. Okay, obviously that's its sector, that's its industry, right? And this is a health growth stock. All right, so those are its 2 areas where it's got a really good rating. All right, and we can see again, the valuation and the profitability rating are just extremely low. All right, which is why we're seeing pain in the stock. All right, we'll come over here to alphaspread.com. Okay, and we'll take a look at some of their fundamental analysis on it. Okay, and the intrinsic value it's saying that it's currently undervalued by 23% with a base case scenario of 195 in the future. All right, currently at 151. That's saying that it's undervalued by about 23%. Okay. Again, you can look at the profitability score here, low profitability score. I explained that to you guys. However, it's got a pretty nice solvency score. Okay, it's 75 out of 100. This is not bad. This is a good sign that you want to see in a company. All right. We look at some of the Wall Street price targets over the next 12 months, and they are absolutely insane. Okay, $6.06 is the lowest forecast for BNGO 12 months from now. All right, that's a 301% upside. The average forecast has got it at 884. That's a 485% upside. And then we have 12.6 is a 734% upside. So, really, really lots of upside by these Wall Street analysts. Okay. I'm not telling you guys that it's definitely going to be these prices in the next 12 months, because again, a 734% gain is ridiculous, right? That's just massive, massive, massive. So that's what I'm looking at basically on BNGO. And that's some of the fundamentals. Just a brief intro to some of the fundamentals. Okay, you really have to dive into the financial statements to get some more. But I just want to encourage you all to start doing this, start, taking baby steps, okay, and doing some of these processes to really figure out if a company is undervalued or overvalued, right? Warren Buffett is most famous for his, value method of investing. And that's what he does is they scour through the financial statements of all these companies, look for intrinsic value, and try to find companies that are undervalued. All right. So we'll go ahead and dive back into the chart now as promised. And we're going to look at the 20-day 1-hour chart. Going to break it down, give you guys, just my technical analysis on why the price action is moving the way it is and what we've been seeing. Okay, so the first thing I'll highlight is these ovals. All right, I want you to get familiar with these terms. Okay, we have a high here. Okay, so we had a low, ran up here, made a high. All right, so this is our high on the RSI. Okay, which is the relative strength index. All right, so you can look at price action and you can look at the relative strength index and look for a divergence, right? This means when one of them is doing something different than the other, right? So we have the price action continuing to make higher highs. We have a high, higher high, higher high, 3 higher highs on the stock price, okay? If we look at our RSI from this high right here, okay, all the way up to the last high right there, it actually went lower, okay? So, boom, right here and right here, okay? That's why we have this trend line here, all right? That is what's known as bearish divergence, okay? So when the price is actually going up on the stock, but the relative strength is dropping, that's bearish divergence. That's an indicator that we may see bearishness in the future, right? And what do you know? We look at the price action later, okay? And of course, we did end up dropping very hard off of that bearish divergence. That was kind of easy to spot, okay? So big drop, all right? We came down, find some support. All right, we're rallying, but look where we're getting rejected at on our RSI. That trend line here, okay, is now our bearish, trend line that we have to break. So once we're able to break this trend line here on the RSI, we can see that, again, we had a nice rally and we came up towards that RSI trend line and got rejected again. Okay, so the more times you test the trend line, the weaker it becomes. So, we've been testing it. We keep approaching it. We're going to be looking for a breakout of that to the upside as a sign for future bullishness, right? That we may see some continued bullishness on the 1-hour chart time frame. Okay. If we look here, this is just an example of breaking that trend line and then getting a bullish pop. All right. So, we have a low here. Okay. From here to here, we have higher highs. All right. And here we have lower highs. All right. High, lower high. We come down. And once we break this trend line, that's when we have our nice bullish pop. Okay. You can look here. How big was this rally? About a 7% rally. Okay. And that's, during that 7% rally is when we broke that bearish divergence trend line and we came down and actually retested it. Okay. And the next day bounced very nicely again. Okay. So that's what I'm looking to happen on this trend line here. All right. So we'll go ahead and get rid of that one. That was just an example of breaking the bearish divergence trend line. So that's what we're going to be looking for. Okay. We're going to be looking to break this bearish divergence trend line. And then these are going to be your price levels to pay attention to, again, for day trading or scalping. All right. We have 151, 154, 157, 160, 164, 169. And above 169, we have 176 and 185. Now, where did I get these price levels? I didn't just randomly draw them up or make them myself, right? That's something that I get a lot in the comments is, TA doesn't work, just putting a bunch of random lines all over the chart. Well, what we've done, okay, is we used our Fibonacci tool, okay, and we just took the swing high to the swing low. All right, that's how you use the Fibonacci tool, the Fibonacci retracement tool, okay, and it's not going to give you random numbers. It's actually going to give you, the Fibonacci is a math formula that exists in nature, all across nature and the stock market. Okay, so that's why it's so important. That's why it's so prevalent, right? Is because it's present in all areas of life. It's not just like some stock market thing. Okay, so we're seeing the numbers here, and that's where I got all of these valid support and resistance levels. Okay, and if you can see, we're bouncing here off the support. We're finding resistance at $1.54, finding resistance at $1.57, and trying to break out past $1.60. So those are going to be the main resistance levels along with this bearish divergence trend line. Once we break that bearish divergence trend line, that's when I would be looking, for a potential move to the upside. All right. On a little bit more of a long-term scale, Okay, we'll zoom out and we'll go to the daily chart now. All right, and we have what's known as bullish divergence on the daily chart. Okay, so we just highlighted some bearish divergence. Okay, and that's when the price was making higher highs, but the RSI was making lower highs. Well, what we're doing here is we're creating lower lows on the stock price. Okay, so we have a low, and then we go even lower. But on our relative strength index, okay, the relative strength had a low here of about 18. And then when we made our lowest low of $1.16 here, the relative strength index was actually much higher and it was at 28. All right. That's an indicator that you may see some bullish activity in the near future. All right. And that is what we ended up getting. We did get that bearish or that nice little bullish pop. And those are the main areas where I'm going to be looking for entries, right? So, it doesn't look bad here. All right. The stock market has been performing pretty well as of recently, even with the bad CPI and PPI data. But, I would wait to see if we're going to, test this bullish divergence trend line and find support. Okay. So you can look and wait on the daily chart for it to come down to these levels and see, are we going to bounce here? Okay, because patterns tend to repeat themselves in the stock market, but they're not guaranteed. There's no 100% guarantee. But if we, position ourselves for, okay, well, if the stock does repeat this pattern, I'm going to be in position and I'm going to have a stop loss, shortly below that, right? So you can enter right along the bullish divergence trend line. If you see we break it and we come down to like 30 or something on the RSI, you can get out of your position, right? Or you can have a stop loss or a trailing stop loss on the actual stock price. Okay, so that's the main things I'm looking at. We do have a very nice daily gap up to fill. Now gaps tend to fill about 90 to 95% of the time historically in the stock market. It's just a matter of when, not so much a matter of if. And the key question of when is they tend to fill during a gaps to the upside are going to fill during a bullish market cycle. Okay, clearly we're not in that bullish market cycle. All right, so that's something you need to be cautious of and be wary of. But if you're planning on looking for long term over the next 5 to 10 years for the next bull market cycle to come around and try to play this, we do have a very nice daily gap up that should fill historically according to the stock market. All right. The only reason it wouldn't fill, let's say, is if the company ends up going bankrupt or there ends up being there end up not being a bullish cycle in BNGO that takes us up there, right? So those are the main things I'm watching. I showed you guys the gap on the daily chart, the bullish divergence on the daily chart. I showed you guys the, bearish divergence on the 1 hour chart that we need to break so that we can really get some bullishness in the chart. And we also took a look at a couple websites and, dove into the fundamentals very briefly. All right. So if you like this style of video, where I kind of show you guys a little bit of the fundamentals of a stock as well, not just technical analysis, make sure to let me know in the comment section. All right, it's something new that I'm just starting and just trying to see if people enjoy that. Okay, because bear markets are life-changing opportunities to create wealth, but only if you invest in the right companies. Right, you can't invest in trash companies. So it's really up to you to do some of this research and say, hey, well, do I want to invest in a profitless company on the on the potential that there's extreme high growth in the future, right? Then you can start investing. If that's not something and you want something that a profitable company that has a good intrinsic value and is undervalued right now, that's also a great option. And really the safest and smartest option for long-term wealth is going to be just dollar cost averaging into an index fund and putting that in a retirement tax advantage account. All right. Once again, I do viewer requests every week. So if you want to see your stock in the next video, make sure to comment below.